Can short-term treasuries serve as protection against inflation? In today's financial climate, many are asking whether short-term treasuries can provide a shield against rising inflation. With inflation rates remaining high, this topic is more relevant than ever. Investors are searching for ways to protect their hard-earned money, and understanding the role of short-term treasuries is essential. Short-term treasuries are government debt securities that typically mature within a few months to 1 year. They are often seen as safe and liquid investments. However, their effectiveness in protecting against inflation is limited. When inflation rises, it erodes the purchasing power of the fixed returns from these securities. If inflation exceeds the nominal interest rate, investors may find themselves with negative real returns. Currently, inflation pressures are elevated due to factors like tariffs and supply chain disruptions. These issues have led to higher consumer prices, making it difficult for fixed-income investments to keep pace. The Federal Reserve has maintained relatively high interest rates to combat inflation but is cautious about cutting rates too soon. This environment has a direct impact on Treasury yields and their attractiveness as an investment. For those looking for true inflation protection, Treasury inflation-protected securities are designed specifically for that purpose. Their principal value adjusts according to the Consumer Price Index, providing a safeguard against rising prices. Compared to short-term treasuries, these inflation-linked securities currently offer a more reliable option for investors concerned about inflation. While short-term treasuries do have some advantages during inflationary times, such as lower exposure to interest rate risk and providing liquidity, they do not offer true inflation protection. Their fixed returns mean that investors need yields that exceed inflation rates to maintain their purchasing power. In light of these factors, while short-term treasuries are low risk and liquid, they may not be the best choice for those seeking to protect against inflation. For adults planning their investment strategies, it may be wise to consider diversifying into inflation-linked securities or other assets that can help preserve purchasing power in this challenging economic environment.